The Global X Robotics and Artificial Intelligence ETF, ticker symbol BOTZ, offers investors exposure to companies involved in the development and production of robotics and artificial intelligence technologies. This includes firms that produce industrial robots, autonomous vehicles, machine learning algorithms, and computer vision systems. Managed by Global X, BOTZ launched in September of the year 2017. Since then, it has aimed to capture the long-term upside of automation and artificial intelligence, two megatrends expected to reshape industries from manufacturing to medicine. BOTZ tracks the Index Global Robotics and Artificial Intelligence Thematic Index. This index includes companies from both developed and emerging markets, with a focus on those generating a significant portion of revenue from robotics and AI-related activities. As of mid-year 2025, the fund holds approximately 40 companies in total, although this number can fluctuate slightly depending on index rebalancing and constituent eligibility. Let's look at performance first. Since inception, BOTZ has delivered mixed results. From launch in late 2017 through 2021, it saw sharp growth due to investor excitement over automation and AI. But from late 2021 through 2023, the fund suffered losses due to rising interest rates and a broader tech sell-off. However, in 2024 and into 2025, BOTZ has regained momentum as artificial intelligence becomes mainstream and capital flows back into innovation. Over the past 12 months, BOTZ returned approximately 21%, outpacing broader tech indexes like the Nasdaq 100. BOTZ's top holdings include major players in robotics and semiconductors. Names like NVIDIA, Keyence, Intuitive Surgical, ABB, Fanuc, and SMC dominate the portfolio. NVIDIA often represents more than 10% of assets due to its dominance in AI chips. Meanwhile, Keyence and Fanuc lead in factory automation equipment. The presence of Intuitive Surgical adds a healthcare robotics component, while ABB adds European industrial robot exposure. This mix gives BOTZ a diversified but innovation-heavy tilt. The fund's geographic breakdown is also notable. Roughly 55% of the portfolio is allocated to Japanese firms, reflecting Japan's leadership in industrial robotics. The United States accounts for approximately 25%, followed by Switzerland, the Netherlands, and Germany. This international exposure differentiates BOTZ from many other tech-focused ETFs that are heavily tilted toward U.S. companies. In terms of costs, BOTZ has an expense ratio of 0.68%, which is on the higher end for passively managed ETFs. That said, thematic ETFs generally charge more due to niche exposure and less liquid holdings. It does not currently pay a meaningful dividend. In the past year, its yield was below 0.3%, making it unsuitable for income-focused investors. This is a pure growth play. Liquidity is reasonable, with BOTZ averaging several 100,000 shares traded per day and more than $2 billion in total assets under management. It is widely available on most platforms and typically maintains a tight bid-ask spread. This makes it suitable for retail and institutional investors alike. Let's now assess risk. BOTZ is highly concentrated in a small number of companies and sectors. Its top 10 holdings represent more than 50% of the entire portfolio. The fund is also exposed to valuation risk, since many AI and robotics stocks trade at high multiples relative to earnings. Additionally, BOTZ may underperform in market conditions that favor defensive or dividend-paying sectors. It's also vulnerable to geopolitical risk due to its large exposure to Japan, Taiwan, and other non-US regions. BOTZ's long-term thesis remains intact. The global robotics market is expected to exceed $200 billion by the year 2030. At the same time, artificial intelligence is projected to add trillions of dollars to global GDP over the next decade. Companies enabling this shift will be at the forefront of economic growth. BOTZ offers a convenient way to gain diversified exposure to that megatrend. Now let's break it down using my meter rating system. Income gets a 1 out of 10. BOTZ pays almost no dividend and is not meant for yield. Risk gets a 6 out of 10. You have high concentration and international exposure, along with tech sector volatility. Growth potential is strong at 8 out of 10, especially with AI adoption accelerating. Thematic relevance scores a perfect 10 out of 10. BOTZ is a pure play on automation and artificial intelligence. Diversification gets a 7 out of 10, with holdings across industries and countries, though still tech-heavy. Cost scores a 5 out of 10 due to the high expense ratio. My total rating for BOTZ is a 7.5 out of 10. This ETF is ideal for long-term investors who believe in the AI revolution and want targeted exposure beyond just big tech.